Coming today's webinar. I have borrowed a title from a very famous novel of World War I by Eric Maria Remarque, titled All Quiet on the Western Front, and one can see the obvious parallel. China, for a good portion of the past few years until, of course, the election of Donald Trump, which seems to have subsumed all other pieces of news. You can't get away from it here in the United States. Was the cause, along with Brexit, of, and before that Greece, and before that, of course, the financial crisis, the source of a good deal of speculation and turmoil in the world's financial markets. The cause has been sort of the age-old Western capitalist fascination with China. This is something which I would say cultural as well. This goes back several hundred years. You can say it goes back to Marco Polo and before. The Romans knew of China vaguely. They knew of some of its products, primarily silk, which was greatly prized, which made it to the West overland, the famous Silk Road, through the western deserts of China, across the steppes, and generally to first the Eastern Roman Empire, well, first the Roman Empire, then the Eastern Roman Empire, then through Muslim traders. It's a trade which goes across millennia. One of the great spurs of Western exploration in the 15th and 16th centuries was searching for a route to Asia. Columbus was looking for a route to the Asian market, and so was Prince Henry the Navigator, and Vasco da Gama, and Magellan, and everybody. So the lure, the material lure of China has been a historical fact for almost all of recorded history. That hasn't changed a great deal now, although we know a great deal more about it. In some ways, the difficulty of discerning what was going on in China and giving the Chinese governments, whichever they are, imperial, briefly democratic, or at least contentious warlord, or the current communist, which I call it the current communist imperial regime, probably more ability to control than they really have. But for the past several months, actually for the past 9 months or a year, China and it's the worldview of China on the world's economic and financial markets has ceased to be one of the drivers of economies, or at least markets in the West. We certainly saw with in 2015 and 2016 changes in the Yuan. I'll bring that chart up right here. Where's my CNY chart? Which one is this? Okay, here we go. This is my CNY chart. Let me see if I have a better one here. No, it's the same chart basically. Okay. This is CNY chart, the domestic Chinese yuan. And here, August 2015, huge turmoil in Western markets caused by this unexpected devaluation in the yuan. Same thing at the end of the year in 2016. Remember the what the Dow did in 2016? Let's see if I have a Dow chart here. I do. 1980, rather long chart. Sorry about that. So here, 2016 plunge, and that was largely based on fears as to what was happening in China. Why were the Chinese devaluing the yuan? Well, I mean, there isn't any mystery to this. Chinese are devaluing the yuan because they want to sell more goods. The interesting thing that's going on here, among many, is that were the Chinese not devaluing the yuan officially in this period, the yuan would actually probably be getting stronger. The perception in the West and on the world's currency markets was that the Chinese economy was doing very well, and the Chinese were stellar custodians of their new generational capitalist economy, and they would do better than anybody else. Well, apparently the Chinese didn't agree, and that's why we have this devaluation in the yuan. It's about 15% over this period. When looking at China, it's best, I think, to view it, if you can, from the concerns of the Chinese economic planners, the Chinese industrialists, and think about the balances they must strike with their economy rather than how the economy is performing vis-a-vis the West and what type of opportunities are available in China for Western investors. I don't think you get a very accurate point of view that way, because what happens is it's the old China trade. The idea, and that, you know, that hoary old cliche, if I can sell one pencil to everyone in China, I'll be a billionaire very soon. Well, I suppose that's true, but no one's ever managed to do it. Interestingly, over the past couple of weeks, I've been looking at some auctions here in the United States, in the Northeast where I live. I live in New York. And I came across one in Portsmouth, New Hampshire called the Northeast Auctions. And they have an auction once a year that specializes in China trade goods. They call it the Marine and China Trade Auction, from the historical goods, usually from the 17th, but mostly the 18th and the 19th centuries. And it is absolutely fascinating to go through the items that are up for sale, China trade goods, commercial products from China in the mid to late 18th century. So 1750 to 1800 and on into the 1800s. And what I'm struck by is the quality. Now, of course, you're looking at some of the best goods, mostly porcelain. Of course, I've told my girls this. When we speak about these things and how the name for porcelain, of course, we all know this is China, and that's because of the Chinese abilities with this product and introducing it into the West. But some of the prices for these goods are astonishing. Now, there's a particular pattern that I like. It's called tobacco for some reason. I don't know why. It is a floral pattern on Chinese pottery, and it's phenomenally beautiful. And the plates individual plates get thousands of dollars. So the Western fascination and willingness to pay for Chinese goods is not a new phenomenon. The New England traders of the 18th and 19th centuries, many of them were China traders. The British East India Company traded extensively with China and with India, of course. And that fleet that would come home every year was a source of a great deal of wealth for British traders and the British economy. It's one of the reasons the British economy and the British nation could fight a 20-year war against Napoleon and end up winning. One of the reasons was because of the wealth of the country, and a lot of that was based on foreign trade. So the idea of China as a source of wealth, aside from a source of fascination, is long standing in relations between the West and the East. Of course, China's success as a trading nation in the 18th and the 19th centuries did not save its imperial system from collapse. It did not save China from being defeated repeatedly by Western powers in the 19th century, and from largely descending into warlordism, warlord period in the early part of the 20th century, a long civil war. So the success did not mean political economic success for the Chinese nation, which is why I think it is far more beneficial for us as traders, analysts, and, if you will, economists. I assume there may be one or two listening. I certainly am not an economist by training. As you know, I'm a currency trader by training and a literary major by choice, at least in college. To look at what are the motivations of the Chinese government, and what are the issues that they must deal with, rather than simply taking a look at the statistics that come out of China, many of which are probably dubious, and then trying to figure out what's going on in the Chinese economy. I think if we take the view from Beijing, we'll have a much greater sense of what some of the conditions are that the Chinese government has to operate under. One condition, which I've mentioned several times before, and I think it behooves us to mention, is the view from Beijing is a historical view. I've long said and believe that the current government in Beijing is yet another incarnation of the long line of imperial dynasties in China. It is the historical, traditional, if you will, form of government in China. The current government may not operate, as far as choosing its leaders and its ruling class, on a hereditary basis, but its organization and its ethos has much in common with the long sweep of Chinese history. Given that view, then the fears and the concerns of the ruling class in China fall into a different context. I'm sure you've all heard this term before. It's become a cliche, but I think it has value. It's the idea of the mandate of heaven. What does that mean? Well, that is the idea that governments in China fall when they have stopped delivering security and prosperity to the people. Heaven being, in this case, some sort of nebulous idea of positive and beneficial effects from rule. China is a continental country. It is vast, but over its history, certainly its history of the past 500 and 600 years, it has been both repeatedly invaded and repeatedly ravaged by warfare. There may be currently no land power on its periphery that offers China the remotest physical threat, the remotest military threat. But it hasn't always been external powers, although it certainly was during the Mongols in the 13th century, and it certainly was during the Qing dynasty, the last Manchu dynasty, which came from beyond the wall in northern China, that there were external enemies. The Chinese have fought wars with the Vietnamese. There was even a Tibetan empire in the pre-1000 that conquered a good portion of southern China. Little is known about it, but there was a Tibetan empire. So China's history is not nearly as secure as it might appear, or as it might appear from the view of Beijing right now. The other great political issue for China has been domestic unrest and domestic rebellions. Poverty, famine, floods, the things that upset the populace and lead to rebellion. These, I think, are very much on the minds, or in the background, of some of the ideas for China. No responsible government will, let me check here. By the way, I know we've spoken about this before. If anyone has any comments or criticisms or questions, please type them into the chat, primarily on the FX Street video channel, and I'll be glad to stop and answer any questions that you have. The bargain of the Chinese government now is much the same as the bargain of the imperial governments. Security and prosperity. And if not prosperity, at least not decline. The Chinese government has engineered probably the most remarkable economic fact, or the most remarkable economic fact and change in the history of the world. I don't see another way to judge that. They've taken a nation that was largely a subsistence nation with a military sector in 40 years ago, after, one might say, over and over again economic failures of the Mao Zedong regimes, and turned it into one of the world's second largest economy. In basically my life, and not basically in my lifetime, in my graduate school, postgraduate school lifetime. I mean, sure, I've told you, I was in China in 1986, 96, 106, 16, 30 years ago when I was in college. I took a summer off and traveled, not during the summer, one of my years, I traveled around Asia. I went to China. And in 1986, nothing had changed. It was almost, I mean, from the communist era, it looked like you're in some sort of immemorial imperial time warp. I remember vividly, the Shanghai, the city and the crowds and the trolleys and the bicycles and the no cars, and a Bund, that means the waterfront area on the river, that hadn't had a looked like it hadn't had a new building since the 1930s, which I think was more or less true at that time. And the astonishing pictures, and I have not been back to Shanghai. I've been to Beijing in the past couple of years, but I've not been to Shanghai, which I'm dying to go to. The changes wrought by the economic policy of Deng Xiaoping. An astonishing change. Clearly, the talents and energies of the Chinese people and the Chinese nation are comparable to any in the world. And there are a great many of them because it's a very populous nation. So the changes, although they were permissioned, if you will, really ugly choice use of the word, were made possible by changes in policy from the Chinese government. It was largely the energy and the initiative, the desire of the Chinese people that wrought this phenomenal change. But China is also a modern nation, and the modern ideas of liberty and voting and the rest of the Western inheritance for the world are also known, if not currently alive in China. We all know of the Tiananmen event, shall we say. I don't know how the Chinese call it now. So to get back to our view from Beijing, the Chinese rulers have to be, and I'm sure are, aware of the historical precedents of unrest leading to the fall of governments, the fall of dynasties. The Chinese government has an advantage in that there really isn't any other power grouping available for replacement of the current Beijing dynasty. In Imperial China, there certainly were. There were local rulers, there were local governors, there were local military forces, and that happened repeatedly in Chinese history. So there is a large factor for the Chinese rulers in Beijing, and that is maintaining domestic tranquility, or at least non-rebellion. And that is the chart of domestic tranquility that we're looking at. In fact, it's actually the chart of the CNY, the onshore Yuan, which is a managed currency. It obeys the dictates of the economic planners in Beijing. And for the past 3 years, it's been doing what? 1, 2, 3. It has been deliberately and steadily devalued. When I look at statistics from China, what I try to do is I view them in the context of statistics which have a real world impact. Let's put it differently. Chinese GDP, or Chinese industrial production, comes out. Those numbers tend to inevitably coincide with the government's expectations. Not surprisingly, the planners and the analysts who are responsible on a local level for producing those statistics have a tendency to provide what the government wants. There's no internal check on those statistics. For other statistics, or for a few of them, such as the Chinese yuan, there is a check. The yuan controls the impact, the mediation between the Chinese economy and its trading partners. So the impact is real. You can't quite order these statistics. If the Chinese yuan, which was down at 6.1 back at the end of 2013, you have another example right here. Let's look at this one. This is even better. Right here. What do we have? Well, what is this? 2008. Well, it's financial crisis. What did the Chinese do? The yuan had been steadily strengthening. Steadily. And then for 1, 2, 3 years, basically, a little bit less. About 3 years, 2008 to 9. Let's see, we have about 2 years, a little bit more. It froze because of the financial crisis. The Chinese just stopped increasing the value, and then they began again, and now they have completely reversed. These changes need to remain in the background of any thoughts and any analysis that you're doing on the Chinese economy. If you're looking for a telltale, everybody know what a telltale is? They're things on the things. They're usually strips of cloth or indicators on sailing ships, on sailboats, usually on the rigging or on the sails, that tell you what the wind is doing on your sail. So you have a real sense of what are the forces at play on your ship or on your boat. Well, this is a telltale that has to be in the background of analysis of all of Chinese statistics. The pattern here is the same. It devalues and then it gets stronger. It devalues and it gets stronger, but every time, and the valuation is lower. This is a very steep, and another thing that's interesting about it is the slope of this line, the devaluation line in the Chinese yuan, is ever rising. This period, the devaluation is steeper than this period. This period is steeper than this period. This period is steeper than this period. So any idea that this is a reversal can't even be really considered until at least this line or this line is broken. So let us assume, based on this chart, that the economic planners in Beijing still see purpose and necessity behind a devaluing yuan. Well, okay. What's the purpose and the necessity? The reason I'm stressing this is because it's very easy to get lost in the back and forth and also the analysis of Chinese statistics. You know, and it's not just an analysis of Chinese statistics. It's the inferences from those statistics that make their way out into Western analysis having to do with, to take a blatant example, commodity prices. I don't have a commodity chart here, but we all know the history. If for that long boom in commodity prices, it was viewed that China, as a marginal consumer of commodities, would always drive the price higher. And this has an impact in the industrial sectors, in price valuations and stock valuations, in economic planning by individual companies and such here in the West. Once that idea vanished or destroyed, largely by this chart here, commodity prices took off on a long fall. Was there really any basis for that? Did the Chinese somehow repeal the laws of economics? Of course not. But as with most things, if it behooves you, if it's in your interest to ignore the negative possibilities, the negative factors, you will do so. And many analysts tend to do that when it comes to China. If you need to have, I mean, if you're, you know, if you're looking at valuations in the stock market or the industrial sectors or the mining sector, and you see demand out of China, then obviously the stocks in that sector will be supported. Prices will go higher. So the sense that China was the driving force of the world economy was very strong. It has, I think, been undermined pretty seriously by this chart and the ideas behind it. Because the basic question is, and it behooves us to ask basic questions. Why are the Chinese devaluing their currency at such a rapid rate? And the answer is obvious, but it's one which gets continually buried in the analysis of specific pieces of data out of China. I mean, whether or not the economy comes in at 6.5 or 6.7% is, in my mind, a very unimportant fact. The important fact of the GDP statistic in China is it really 6.5 or 6.7 or 4.2? And there's no way to answer that question. Is industrial production really growing at 6% a year, or is it growing at 1% a year? The fact whether it's 6.2 or 6.4 or 6.3 is not an important question. And the really important question you can't answer. So you have to turn to charts like the Yuan to see what's behind what's going on. Here's another chart of the same type. This is China's FX reserves. So this is 2000. Hold on, let me just make this a little larger so I can see exactly what we have here. Okay. Well, this is very strange. It's 2010. These charts, by the way, are Thomson Reuters. We've switched. It says 2010 here, but if I can tell, 2010 is back here. I can't actually tell you why these are here. I'm still kind of new to the charts. Anyway, we can see that from 2015 on, there's been an absolute decline of almost $1 trillion in the Chinese FX reserve. What do they do with all that? Well, believe it or not, despite the prior chart we saw with the devaluation of the yuan, they're supporting the yuan, among other things. And they're probably also using it to support the economy. So here we have two facts, which I don't think have to be queried very much, that are telling us that some of the other statistics that we're going to look at are useful primarily in the trend. It's very difficult to analyze the specific factors. Okay, this is important. Thank you for the comments on YouTube. It's appreciated. The analysis based, as I said, on specific statistics, China's very difficult to, very difficult to look at from a statistical point of view. So let's just take a look, okay? Let's do one thing. Here's another thing we can take a look at here. This is another, it's not as good as the others that I just did. Let me just find it here. Okay. Because the others relate to outside impact. Okay, this is the Shanghai composite. Let me just show you one other chart first. There is a tendency amongst analysts, and certainly among equity analysts, to believe that stock markets always go up. Believe that not. This is a market, this is the chart of the Nikkei. It has never gotten remotely close to that peak in about 1990. If you look at a chart of the Dow going back to the 1920s, you will see that from that peak in either 28 or 29. I think it was early 29. It took the market 25 years, including a world war, to get back. I think it reached the peak of 1929 in 1954, if I remember. That's 29, 39, 40, and that's 25 years. So the idea that, and this is the Dow, stock markets always go up over the long period, is true, but it's a truth that one should be very wary of. There have been long periods in various stock markets, including the United States, where you do not retain or regain value. So here we go. Here we are, 20,357. This is on an economy growing about 2% a year. I think you can have your answer on that one. But anyway, back to China. Okay, so this is the Shanghai 225. Shanghai 2, I'm sorry. Shanghai Composite. This is the financial crash pre-peak. This was another peak, largely with the Chinese government running things up. And here we've calmed down here. So remember, the one thing about this is Chinese government is actually in the market buying stocks. Well, frankly, if you have the U.S., Western banks issuing debt and buying, not issuing debt, but buying their own debt and putting money into the markets, and it ends up in the market goes to 20,000. I don't know that there's a great deal of difference, frankly. The markets are supported artificially by liquidity. I don't think there's any doubt about that. That doesn't mean that markets then, to give you an example here we have the Dow. Even if a good portion of this, say from 14,000 on, just take a level, is supported by artificial liquidity, that doesn't mean that when the liquidity is drawn, the market drops back to 14. The market then starts to look at economic realities, the fundamentals from that point. And it doesn't necessarily revert back to some arbitrary level pre-liquidity, pre-quantitative easing. I think that's kind of a fallacy which often gets misunderstood for markets. Markets need a reason to do something. So you won't get a rapid sell-off until you see a reason to do something. Okay. It's like with the yen at in the mid 80s for years, with the Japanese economy barely growing. It made no sense, but it was a good logical reason for it to be there. Anyway, so here's the Shanghai. Okay. Now this is not as powerful an indicator that things are amiss with the Chinese economy, or at least not what they were, but it is one. These kinds of extreme bubbles and collapses are indicative of, I mean, one thing's true about the Chinese economy is there aren't nearly as many outlets for investment. I'm not sure that that matters in the long run. Okay, so we know that something's going on in China because we've seen it in their other statistics. So this is Chinese exports. So let me give you some more of my logic behind this. The background I look at is the Chinese yuan is steadily devaluing. That is telling you something very important. The Chinese are spending their FX reserves at a phenomenally fast rate. That is telling you something important. This is Chinese exports. Now, what's important about this chart? Is it really whether this is 7.9, this was higher here? No. In this chart, what's important is the trend. And two things are important about the trend. One, this trend from the financial crisis on, and that trend is also here. you can draw a trend line right back here on an average, which goes just like that. This is a year-on-year export increases. Now, because it's year-on-year, and because this is a statistical product of what's back here, you have to be careful at these peaks here of 45. It's like these peaks here. Well, this is much greater year-on-year because that was so much less. Nevertheless, we all know that. This trend is lower, and it's a trend that goes back 15 years. Okay, that's exports. Imports. What do we see? The same thing. And why do we see that? Well, a lot of Chinese manufacturing is actually reassembly. This is not quite as dramatic, but it has basically the same trend. Lower. The individual statistics this beat here means to me very little. Let's look at some more stuff. Where is industrial production? Hold on, I gotta find it. Don't I have industrial production? Imports. Did I miss my industrial production chart? Sorry, folks. I felt sure I developed a... Anyway, I don't see it. So if I don't see it, I can't use it. Okay, anyway. Retail sales. This one is also, in my mind, even more important than the others. What's going on here? Okay. China has an export-driven economy. It's largely, I mean, I was looking, we were buying, my girls have a Valentine's Day party for their friends every year. I think like 17 or 20 little girls running around our apartments. Quite a scene. They're 8 years old, so they're all 8 and 9. So we're at a store buying little party favors for all the girls that are going to be over there tomorrow. I'll make an appearance late at the end. And I am not particularly useful on this topic, so my wife was doing most of the advice and the purchasing. But I was wandering around the store, looking at where everything was from. And you know where this is going, of course. 90% of the stuff was made in China. Little trinkets, you know, inexpensive, all sorts of things. A few items were made in the US, nail polish that I could find. A few items, false eyelashes, were made in Britain. I found one item made in New Zealand. And pretty much everything else in the store was made in China. Now, these are not high-value items. These are very, very low-margin items. They're made in China because the labor costs in China are infinitely cheaper than they are in the West. And these items have essentially no added value or very, very little. And then what does that tell you? Well, that relates directly to the reason why the yuan is being devalued. The crucial factor in these export items, now this is not the entire Chinese economy, but I think you can say it. I mean that these items are not typical of the Chinese economy, though in fact they are. But the crucial factor in Chinese exports is price. This is not true for other countries. This is not true in Germany. The crucial factor in German exports is not price, it's quality and technology. The crucial export in the United States for non-raw materials and non-agricultural goods is quality. That's why the Chinese are devaluing the yuan, because they need to maintain the price advantage on these low value added items, like the trinkets in this store. Now, China has planned for many years, they still have 5-year plans in China, you know. I find that kind of fascinating. Retail sales in China, again, year on year, so you have this false peak here, really. But if Chinese consumers are going to be replacing export sales, I'm not seeing it here. What's happening, of course, is the Chinese consumer is Chinese consumers are not buying the trinkets that are going to stores here in the United States for 8-year-old girls' Valentine's Day parties, but they are investing in stocks and they're investing in land both in China and overseas. They're not yet developing a consumer-driven economy in China. Now, there's one other fact that I want to mention about external views of China, meaning the things that you can look at to see if the statistics make as much sense as they should when they're looking okay. And that is the idea of capital flight out of China. The Chinese are caught. I mean, look, all economic choices are choices. There's no right technocrat decision. There may be a few wrong decisions, but there's no essentially right decision. The Chinese need currently to devalue the yuan to keep the exports flowing, especially the low value exports. They need to keep the economy humming, to keep people in jobs. They need to do that so that they don't experience restive workers, which I think they're afraid of. They are clearly spending money to do that. Here's another chart. Loan growth. Is this the one? No, that's not the one. New yuan loans. Here we go. New yuan loans. Now, what's astonishing about this chart? And it is astonishing. This peak right here, beginning of 2016. The Chinese pumped more money into the economy than they had ever done before in the history of China or the world. Does that tell you that the economy is doing well? No, of course not. It's telling you that the Chinese fund their economy to a much greater degree by simply ordering banks and others to make loans. I mean, I'm simplifying it. It's much more complicated, and I'm not a China scholar, and I don't read Chinese. This along with the yuan, the FX reserves, is telling you that China is worried, that the mandarins in Beijing are worried. They're spending a ton of money to keep people doing stuff. Okay? So, we just did that one. I'm sorry, that's new yuan loan. So let's take a look at a few others. This is actually, it's percentage loan growth. And you can see here, oops, I got to pull the chart up. And you can see the functioning of the Chinese economy here. Percentage loan growth. You can see what they did in 2008 and 2009 to keep the economy humming. They just pumped money into it. They did it different, which is exactly what the West did, but they did it differently. Okay. This is another, and so I'm going to get by. There's one other. It's called capital flight. I'm going to talk about it in 1 second, then we'll wrap up here. Chinese CPI. Global development. I've said this before. It's easier and faster to build a factory than it is to build a consumer economy, to build a consumer culture. So, I mean, I remember from my childhood when there were all sorts of critical sociological articles. Well, I didn't read them when I was a kid, but I read them later, criticizing the development of a materialistic consumer culture to a much greater degree than ever before here in the United States. How empty consumerism was, and the empty life of suburbia, which is a complete and utter bunch of nonsense. For any of my listeners who are not from the United States and see American movies with depicting the emptiness, the shallowness, and the hypocrisy of suburban life, I can tell you those movies are nonsense. I grew up in the suburbs, and they're a great place to grow up. Those people who make those movies don't know what they're talking about, or they're looking for an audience. A little bit of diatribe from me. Sorry about that. But Well, what are the things China is exporting besides trinkets and other things? And China don't only export that, of course. I have my drills, my hand tools. Many of them are from China, made by Western companies generally. They're also exporting deflation. And so is everybody else. The competition to grow your economies, to keep your economies growing at a high pace, to keep improving wages, to keep improving standard of living, has created what? Well, manufacturing jobs around the world. And what do? They export deflation. Why? Because their purpose and their goal to achieve success in a capitalist system is price denominated, price differentiated. China needs to keep those little girls' trinkets low or some in price, or someone else is going to produce them. We were at a store, Costco, here in the United States, and near our house, and we bought 2 flashlights. Nothing very interesting in that, except they were really high quality, very well designed, as far as I can tell. We just got them, and 2 of them were $20. Now that is serious price pressure. That's what we're seeing here. This is domestic CPI in China. Like the charge from the West, there isn't any. Okay, so one more topic I'm going to talk about here. I'm looking for the best chart to talk about this capital flight. Yeah, I think it's probably this one. No, let's use the other CNY chart. If you are either a foreign investor trying to repatriate, thinking about repatriating profits from China, or a domestic investor or industrialist who is concerned about the value of your currency in the yuan, this chart is not very comforting. And what's the corollary of this chart? It's capital flight out of China, for which it's more difficult to find reliable statistics, but we can assume it's huge. Both officially, that is for companies trying to get profits out of China. When should you get your profits out? Here or here? Well, that's a 15% difference. That's a lot of profits. That might be your profit margin for the whole year, or might be your profit margin for the entire investment in your factory. So the incentive, looking at this chart, and also looking at this chart over here, 2007, it was 7.7 and higher to the dollar. So the other problem with China is capital flight, and this is the one which is difficult, which is what the Chinese are trying to manage. On the one hand, you need to devalue the yuan to keep your products price competitive in an ever competitive, ever developing world, meaning everybody's building factories. Our new president wants to bring factories back to the United States from overseas, from other countries. Because in fact, manufacturing jobs are one of the few ways, along with construction jobs, to provide a decent living for relatively unskilled workers. Unskilled workers don't start designing websites. They don't start doing digital marketing. So for China, this chart cuts both ways. They need to devalue the yuan. That chart clearly tells you that this, sometime here, the policy decision was made in China and they have stuck with it. My guess is this starts going back up. You could say that this, it's interesting that, well, I'm not going to go there. That's politics. I'm going to let that one go. So this chart one is telling you that China needs to continue to devalue to maintain the price advantage of its products, to keep its factories humming as best it can without having to spend too much money. Two, it's also telling you that the longer this goes on and the higher the dollar yuan goes, the greater the pressure for capital flight, for people desperately trying to get their money out of China. It also brings to mind, did I bring up, I don't think I did the FDI chart. I did not bring up the FDI chart. This becomes a factor in new factories in China, foreign direct investment. I know, again, it's a factor that cuts both ways. It becomes cheaper to build a factory in China or to put one up because the yuan is cheaper and your dollar goes farther. But it also means that your profits 2 and 3 years down the line are much higher in question, and you have to factor in your analysis a 10% or 15% devaluation in the currency over the life of your investment. That becomes a very difficult factor, even considering the differential between the costs of manufacturing things in China and the costs of manufacturing things in the West. So this chart is also a real factor. Another factor you can look at, of course, are property values in overseas markets, in Hong Kong, in Vancouver. You hear lots of talk, difficult to prove, that all of these purchases are from Chinese looking to get their money out of the country. Very difficult to say whether that's true, but in the background of all of China's statistics are these factors, which are realistic factors. So where does this leave us for the Chinese analysis? Remember, back here and here, here and here, the devaluation in the yuan led to huge amounts of turmoil in Western capital markets, Western equity markets. You notice that there's been none here. This devaluation here from the fourth quarter, a little bit less, of 2016 until just about the end of the year is far greater in extent than this one or than this one, the two prior ones, which completely upset Western markets. So there is a further psychological factor in here, in that markets tend not to pay attention to the same thing as far as signs of Armageddon over and over again. We are currently in the process of discounting this chart. The last time the yuan fell this much back here over so rapid time, this is greater, equity markets in the West took a plunge. That's not happening now. Markets are funny and psychological creatures, but markets have clearly decided that between Brexit, the election of Donald Trump, the French vote in March, and the Dutch vote in March and the French vote in March, and then in May, I may be wrong about those dates, and the potential Italian vote, they have bigger things to worry about. So this indicator from the Chinese economy is being routinely ignored at the moment. This will not last. But I think we have 6 months of Western political focus before we return to China. It seems from the evident indicators that because there is no global recovery, there is no real Chinese recovery. The only thing I can say prognosticatorially about China is stay tuned. This story is not over. Okay, thank you very much, everyone, for attending. I hope it was useful. I hope it was mildly entertaining. I'll put up my email address, or FX Street will, and you can all wish me luck, since I'm going to the 28-year-old Valentine's Day party tomorrow. Quite a little hurricane 20 girls can create. Okay, everybody, have a great day, and we will see you next week. Take care.